buckle your seatbelt because the next 3, 4, 5 months of CPI will probably be very, very bad. 7, 8, 9%.
Hello everyone and welcome to the Daily Crypto. According to Chamath, a massive financial disaster is just around the corner and we have to be prepared. He is going to talk about why this is going to happen, so make sure to watch the full video. Before we get into the interview, let's see where the Fear and Greed Index is sitting at for today. Currently, it is at 20, indicating that fear among investors continues to grow. As of recording this video, Bitcoin and Ethereum are trading for $19,200 and $16.28 respectively. With that being said, let's continue with the video.
The thing that you have to do before you talk about what is happening now, I think it's probably useful to go back and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. A bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there. So the thing to remember is we have not necessarily just been obfuscating true supply demand in the last 6 or 8 months when we've been talking about a recession or inflation. We've been actually doing it since 2008. It's just that it's been building up in the system.
When the 2008 financial crisis struck, governments bailed out several banks with taxpayers' money. To make up for it, some monetary scientists suggested printing money to boost the economy. Since then, it has been going on and governments around the world have printed about $30 trillion. This is why Chamath believes a great reset is bound to occur, because all this money was never supposed to circulate.
And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. And I just don't think that takes 6 months. So for all the people that were, fingers crossed, hoping that this would be the end of it, Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action.
Look around you. Prices of everything have skyrocketed because of excessive money printing. Now imagine everything going back to normal in a very short period of time. It would be disastrous. Consumers and businesses will lose billions of dollars, wreaking havoc on the economy.
I think we have to also be sensitive to the fact that the Fed operates on a certain class of data, and that data in the 21st century is pretty pathetic. Nick, you can probably find this, but there was an article, I think it was in the New York Times, that really walked through how CPI is calculated. And it's a bunch of people that work for the government that walk around with iPads, building relationships with local businesses in all these random places all around the country, and asking them to, chit-chat for 15 minutes and do these surveys. Now, you would have thought that in 2023 or 2022, what the government would have said to, Visa, MasterCard, American Express, all the payment rails, the banks, and Stripe is, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when a good or a service trades hands for money, right? And you calculate what did that thing trade at the day before and what does it trade for today. So you could get an absolute precise sense of it. Instead, we do this random sampling thing, and
subjective,
it's bad.
Humans, etc.
So if you read this article, your takeaway will be, oh my God, this is very rickety. and it drives an enormous hammer that we use to try to manage the economy. That's the first thing. I think you need to buckle your seatbelt because the next 3, 4, 5 months of CPI will probably be very, very bad. 7, 8, 9%. Why?
Chamath explains how the government measures inflation. He says their methods are outdated and unreliable, which results in an inaccurate figure. He says proper means of record keeping need to be established so we can know exactly how much inflation is affecting a product or a service. Take a look at this next clip where Chamath tells us why the CPI numbers are going to be very bad for the next couple of months.
There are a handful of components that have gotten completely run away. Number one, the biggest one is rent. And so rent works on a 3-month lag. We're going to reintroduce what the true owner's equivalent rent is into CPI. So we can already forecast that CPI going up. Oil is at $105 a barrel. Russia is basically trying to break the back of Europe by now messing with their nat gas supplies. The German energy minister yesterday said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy. When you play all of these things out, what you have is unfortunately rampant runaway costs that really have no mechanism to get back in check in the absence of some real governmental changes. Our policy on this Ukraine-Russia war, how we intend to sort of work or cooperate or fight with China, all of these things have to get solved. So in the absence of that, prices are going to continue to go up. And so what does the Fed do? How does it throw away what little credibility it has left when there's 8 and 9% inflation prints and saying, we think we're done for right now? You can't do that. So they will overcorrect because there's just going to be so much pressure for them to act. All roads, I think, lead to lower equity prices. And I think what David said astutely is we've seen the first wave, but now it has to touch all these other areas.
One of the biggest reasons why CPI will go through the roof is because the rent market has been going up like crazy. More people are struggling to pay their rent now than ever before. All this is because of rising inflation, as people simply don't have enough money left after their necessary expenses.
We have gotten totally drunk on debt as a country. One of the most obvious places where we've been serving alcohol far too late into the night is in the financing of all these private equity leverage buyouts.
Yeah,
right?
Leverage is dangerous.
These are sketchy companies that are sort of like, teetering on insolvency at times, where private equity comes in, levers up the balance sheet with debt. They price it right to the edge of what's legally allowed or what's financeable, and then they go do it. But that's all assuming the economy continues to grow. And so if all of a sudden you have some recessionary forces or prices go up and earnings don't, you'll have, a contagion in the debt markets. You could have a contagion in the commodity market. So we're dealing with some really tough boundary conditions.
Debt is the answer to why stock markets collapse. To put it simply, companies use a lot of debt to show for on their balance sheet because then they can be bailed out by the government in case things go sideways. We saw this happen in 2008, when government essentially paid off $800 billion of taxpayers' money to save banks from defaulting.
Well, look, I told you this because I wrote this in my annual letter, but it's stunning that, the reason the stock market went up, dollar for dollar, was actually tied to the growth in the M2 money supply. The correlation was 0.92. So for every dollar that the Fed printed, the stock market went up by 92 cents. So, it stands to reason that if the Fed is going to take $3 to $5 trillion of value out, then we have to re-rate the equity markets by $3 to $5 trillion at a minimum. And then you have to re-rate and re-baseline for earnings.
Chamath reveals a rather shocking number that indicates the stock market went up by 92 cents per printed dollar. This is a surprisingly high correlation, which leads us to the question, what will happen if all the printed money was to exit the stock markets? It will disrupt the entire financial system, since stock market is a major part of a country's economy.
But then now are kind of working around it so that the countries that suffer the most are Europe. Now, I think you're starting to see the tea leaves, though. Last week, there was a group of European leaders, I think it was Macron, Draghi, and I can't remember if it was the German chancellor or not, and one other person, who went to Ukraine. And if I had to bet, I think the message was kind of like, all right, listen, like we need to find an organized detente here, because there is, according to Europe, a Lehman-like situation in terms of economic contagion that could manifest over the next months. So I think that the end game is probably some organized, negotiated detente and ceasefire. I don't think anybody will be happy with it, but I think by and large, Russia is and has won, meaning they've won economically. They're selling oil like it's not, like it's going out of style. It's just not selling it to Europe and to America. They're selling it to China.
The Russia and Ukraine conflict has shaken up the entire world economy, and according to Chamath, Russia has already won. When the war first started, Russia was hit with strict sanctions, which led to the value of their currency declining rapidly. However, since then Russian ruble has become one of the best performing currencies in the world after they started selling oil to major countries like China and India. It's only a matter of time before Russia completely takes over the situation and turns it into its favor. Thank you for watching this video. Make sure to drop a like and subscribe to our channel to keep watching informational content like this daily. We would love to hear your thoughts, so drop a comment about what you think about the economic situation. See you guys in the next video.